So our topic for today, folks, is Series A crunch. And it's interesting because if you think about it, a few years back, the biggest issue in our country was seed angel capital. Everyone was asking who's writing those early checks. There was plenty of Series A money around. And now, suddenly we have a situation where we're sitting in a panel where we're talking about a crunch for Series A. What I'd like to do is kick off with question number one, which is there really a Series A crunch in the first place? So, Karthik, what's your initial take? Is this a fair? Is this something that is of concern? Is this something that is something you need to be worried about?
So, thanks, Sasha. Thanks to VCCircle for having us. So, see, my take is we've all kind of evolved together from Mumbai Angels to setting up seed funds. And so it's kind of a revelation for us as well. So it's not like I know this for certain whether there is a crunch or not. It's fashionable to say that because the Valley blogs say that there's a Series A crunch. And I think it's a part of a natural evolution path. And if you look at how venture was built in India, it was predominantly bigger funds from the get-go. So, a lot of imports of foreign brand names or local funds that started and of course have become bigger like seed fund, Axel, etc. But it was not angel funded to seed funded to venture capital kind of an ecosystem. It almost started top heavy. So the bar for Series A, I think in this country has always been high. It's not going to come down just because there are a bunch of seed funds and a bunch of angels funding a lot more companies. So my take on it is that the bar was always high. There were a lot of entrepreneurs who had managed, Mr. Blume is a great example, that, managed without something called venture capital and managed to bootstrap it to a point where capital was waiting to be put in. So money of a just dial, etc., didn't require seed and angel capital to build it to a certain stage. He built it and then the venture guys found it. I think they were like easy pickings when they came in because a lot of entrepreneurs had built businesses to a scale where Series A became very attractive to play. I think that era is gone because all those easy pickings have gone. Now it's time to sort of build from ground up, and it's not easy in India. It takes 3, 4, 5 years. It doesn't happen magically in 12 to 18 months. So people, even we are guilty of that. We expect like, oh, we funded them for 12 to 18 months. Where's the Series A? So Series A is not coming unless you meet that higher bar that they've always had, in my opinion.
Can you define that higher bar in a little bit more detail?
So it seems okay. There have been little bit of bubbles in things like e-com, etc., where there was a phase where anybody who had 40 orders a day was getting funded. But that's a bubble. So I think that varies from sector to sector, but we are seeing that bar is fairly high. Like for example, in SaaS businesses, software as a service businesses, we are seeing that bar to be closer to $1 million of revenue run rate. It's not happening because you have 20, 30, 40 clients. It's happening when you have 400, 500 paying clients and that the bar is closer to $1 million run rate. In e-commerce, I've been told that if you're not in a $2, $3 million revenue run rate, we're not interested. But there is no venture money. I think, see, there are, the one thing that even we learn after being entrenched in the ecosystem, as opposed to startups who have no idea how venture guys broadly operate or what our internal constraints are, is that you have to understand that, for example, in e-com, you might be a really interesting company, but the industry is overcommitted on that sector. So even whether you want it or not, there is no money, right? So there will be all these nuances that are playing, and it's a very small industry. There are, 15, 20 names, you would say, in Series A?
What advice do you give young companies in this room, especially companies looking out for capital at this stage? What's the single most important advice you would give a young startup today?
So I think when you're planning your first, either you bootstrap, like some great entrepreneurs have done in this room and outside, or when you take that money from angel group like a Mumbai Angels or individual angel investors or a seed fund like us, I think you need to plan for whether that money can actually take you to these much, much higher metrics. It's not that the money gets over and therefore magically a Series A will emerge. There is no such magic in the industry. There is a need to be conscious that it will take much longer. So I think the journeys are much longer. The bar is much higher. And therefore you have to prepare for like a 3-year slog as opposed to a 12-month slog.
Manish, any thoughts?
So I just being a data guy, I pulled some data based on what VCCircle has shared with us. And it says that in 2012, venture capital money in India declined 18% over 2011. Now, obviously, 2011, there was probably a lot of e-commerce investments, but that's a fact that the money did decline. The other interesting thing I found was that just the number of angel and seed deals went from 33 to 185, over the last couple of years. So right there, you're talking about a lot more angel and seed investing, probably a same amount or less amount of Series A venture capital investing. So if you just look at the numbers, probably there is some truth in this. And then there's one more, which is number of angel funds, 7 funds in 2006 and 32 in 2012, and over 35 accelerators in India right now. So just the stats show that there's a lot of stuff happening very early stage, and probably not the same amount of expansion on the Series A side.
So Manish, are you saying that some companies getting funded that should not be getting funded in the first place?
Yeah, that's a good point, yeah, because, again, you all have been investors a long time. I've only done investing through Mumbai Angels for the last 2 years. But, being on the board of some of these companies, it's certainly clear that many of the entrepreneurs certainly could be a lot more mature in how they raise money and how they use the money and how they spend their money, how they think about the plan over the next, not just 18 months, but 3 years. Because if they have to reach a certain number of objectives or milestones to get to a point where a Series A investor is interested, then they have to plan that out, and it's not as easy as saying, here's the money, my 12 months is over, I need more money. Because that's, I think, what's happening, and then they come back to people like Kay and Blume, who then give them a bridge round. And the question is, how long do you linger? Do you keep lingering up to 3 years, and then do you at some point say, the product market fit is not there, or the paying customers are not there, the repeated customers are not there, or just the economics aren't working. So that's what I'm wondering is, yes, there's a lot of these early stage deals happening, but are they all meeting that bar that Karthik mentioned so that the Series A investors are actually interested? And just one other point is, I spoke to 2 Series A investors yesterday, 2 VCs, very prominent guys, and they said, obviously, as they would say, that no, there is no slowdown, and or there is no crunch, and we still invest in high quality startups. So if we see those high quality companies, then we will invest, but that's not necessarily what we're seeing 12 or 18 months down the angel investment cycle.
Yeah, I agree. I had breakfast with a VC friend of mine this morning, and I asked the individual as to how many deals they've done in the last 12 months. And after a little bit of waffling, she mentioned that she had done no deals. So, 12 months, Series A fund have 150 million to invest, but no investments from them. Question to Karthik, you have many investments in your fund. Can you give any examples of companies that have done a great job of managing a very small amount of capital to get them ready in tough times?
So,
and what did they do? What did they specifically do? If you look back and say, this entrepreneur, you don't have to mention the name of the company if you don't want to, but if you can.
So I'll give one example which is easy for me, which is Avlesh of WebEngage, right? So if you look at WebEngage, the guy, even before he came and pitched the deck, knew exactly how much he's going to budget in terms of his cost structure. He knew exactly at what point he wanted to be break even, right? And all these things, calculations can go wrong, but I'm just saying there's an importance in the thought process, right? So somebody said, there's a nice quote the other day on Twitter which said, a PowerPoint presentation is not a product, or rather a PowerPoint pitch presentation is not a product, it's a process. And so I think that's what stood out in this guy's, in this guy's process since then. And he's been hinting those milestones. So he knows that he wanted a very small amount of cash to, who used that word, to invest, not to spend, to invest in 2-3 areas such that he got to break even. And that's a great point to be for an entrepreneur. And we push a lot of our entrepreneurs to get there. So that then you can sit back and say, I can wait. I can play this waiting game with the Series A VC. I'm not at their mercy. I won't die if they don't give me money tomorrow. And whenever you're in that position and you're trying to negotiate, you might as well be dead. So I think the guys who've got it right have figured out when they come in with utmost clarity, whether they're raising 1 crore, whether they're raising 50 lakhs, whether they're raising 2 crores, that there is a path to break even and not being dependent on somebody's charity to be able to survive. And the ones who don't, I feel very nervous about now as an investor in my portfolio.
Okay. Some companies, they try their best, but can't find a way out. Are you guys seeing any innovative exit opportunities for these companies? One of my companies where I invested as an individual is a leading company in their category of the internet. It's an internet company. It's 5 million uniques. So it's fabulous as far as that is concerned. The entrepreneur has been trying to raise capital for the last, I think, 8-10 months. And obviously, unfortunately, has not managed that. And I had a conversation with him yesterday where he said, I will do anything. I just want a healthy exit. As far as not monetary, but let someone come and take this asset off my back. So I said, okay, how about this? I mean, it was silly example. I was giving silly things. I mean, really. But to be fair to him, he was open. And we're going to work on something over the next couple of weeks. Nothing may come off it. There's another company that we are working on an innovative exit as well. Again, too early to say, but I'd love to hear from the panel as to realistically, like in the US, a lot of companies, Yahoo's been buying companies like chips every day. Are you guys seeing any opportunity realistically, or is it too early to say?
I mean, again, from a corporate perspective, certainly I think all the stuff that you see large corporations like Yahoo or Google buy in the US, a lot of it is certainly because of the technology or the people. I mean, being part of Mumbai Angels screening committee, you see a lot of deals coming through, but you still see a lot of deals in the Me Too internet space or mobile app space. So the application space, or really an idea which has worked abroad and people are trying to make that happen in India. Yeah, I still see a lot of those. So the question is, how many core technology plays are happening out of the India market from a startup perspective, which is so unique globally that a Yahoo would want to acquire them, right? I mean, if it's just simply another consumer internet play for India with the kind of monetization struggles on the digital advertising side, are any of these internet giants going to acquire them? So, maybe there are. I'm just suggesting that I haven't seen a lot of those.
So you're saying that how many companies are compelling enough for a Yahoo or a Facebook to say, come, let's just buy this company, even though it's pre-revenue?
I mean, compelling really from a, something unique on the technology front that can allow those companies then to create entry barriers for their competitors. I mean, those are the kinds of things that they're probably looking at if they're doing a, $100 million acquisition.
I'm not even talking about 100 million, I'm talking about 10 million. 15 million, really early stage. What do you think?
It could also be people, by the way. Right? I know Yahoo's doing a lot for the people.
That's right.
Because it's been tough to get really good people. Given I worked at Yahoo, so I know it's been really tough to get good people in the valley.
That's right. Yeah, in my old job, where I worked for a Silicon Valley fund, we would sell our companies for 10, 20, maybe even the last one we did was 200 million, where Google bought us one of our portfolio companies for 182 million and shut the company down in 6 months. As everyone in this room knows, it's obviously for the people. And that's another thing I would recommend is build for great people and don't compromise on those people, because those people are very, very valuable. I mean, can you imagine 1,000 crores for people? But it's possible, it happens every day. Are you seeing any early companies where there's any interest from global investors, or too early in your portfolio?
No, so I think the macro point is that I don't think we can, as seed funds, there's long-term survival is going to depend on M&A, right? But counterintuitively, there is no M&A. So we are also kind of caught up in this Series A crunch because we are also desperate for the company to sort of get its next legs of growth or our exit via the Series A mechanism, which is hurt. There's no easy solution, as we've discovered. It's not like we both can become sell-side bankers and keep peddling these companies. And the irony of M&A is that I don't think a founder lands up at work one day and says, I think I should sell today. Right? He never says that, right? He or she never says that. So the challenge then becomes the buyer should be interested in the asset. And today I don't even think there's a process laid out for buyers to discover interesting assets in the market. There are no bankers, there's no platform, there's no angel list. I mean, there's no active discovery platform for, in fact, somebody told me that there have been acquisitions which have been led by discovery on angel list in the US. So there's somebody probably in corporate M&A in Yahoo who's actually going through what are the cool companies in Angel List in a particular sector whenever they have an interest in that technology, right? So it goes back to it being buyer-led as opposed to saying, "Aaj mujhe paise nahi mil rahe, so I'll sell." So it can never be that way, right? And so which means you have to go and build a culture of having buyer-led interest into startups. The Americans or the American companies would say, is there a cool technology which is not there in the valley? Or are you guys so important or so large that I would buy you? And that's going to continue to be a big challenge for sub $20 million acquisitions.
So what advice, Karthik, can you give some of these startups as far as actually proactively creating an ecosystem where they get in front of these companies, not to go and sell themselves, but just say, look, we are around, here Mr. Microsoft, here Mr. Citrix, Ravi's in the audience, and say, look, we're here, we're just here to say hello, and, what's the best way to do this?
I don't know. So NASSCOM tried one 2-3 weeks back. It got some ET coverage, did you see? So they got all the big ITES companies. I don't know whether they're buyers. They're good buyers. So I asked a couple of my startups who got selected into that startup list, so what is the outcome? So they said everyone gave cards and everyone wrote a mail and they've never heard back. Even for a commercial relationship, I don't think the intent there was to get bought. The intent was for an Infosys or whoever was in the room. I don't know who all were there in the room, so I'm not going to take names. But it was to see whether there are interesting product companies with whom they can partner, leave alone buy. Even that, the follow-through hasn't happened. So I think culturally we are not there yet to say that like a Yahoo or a Google which picks up 5, 10, 20, 30 companies a year and just acquires and absorbs them. I don't think Indian companies have built a culture of acquisition. The closest I've seen is Naukri. Make My Trip as Naukri and Times Group, and these are the guys, Bharti SoftBank now, with Kevin leading that initiative. They're all talking about absorbing interesting companies into their portfolio, either at the parent company level or buying them for some technology, or saying there'll just be an acquisition and an umbrella, like an IAC-like model, where we will buy a few interesting assets, which is what Naukri is doing. So that could be an option.
So I think not about acquisition, but certainly about partnerships. I know that my company does this, and we're doing this quite successfully right now with a startup which basically came to us and said, we'd love your company to bundle one of your products with one of our products. We take this joint value-added product to the market. We acquire customers for you. Why don't you fund our marketing? And so we've done that. We've actually worked with this startup. They've got us a new segment of customers through this value-added service, where a lot of this product is their product, but they've bundled it with ours, and we are providing the marketing funding for it, which means that the startup doesn't have to spend their money in doing some of the product market fit discussions that we spoke about. I think there are interesting opportunities like this. So granted, maybe at NASSCOM, Microsoft didn't write back, but I think that there are opportunities for startups to work with larger corporations and figure out how they can further the intent of that large corporation, and maybe there's value there.
Let's go back to the main topic, which of course is a Series A crunch. So the question to Karthik is, there's a young entrepreneur, he or she comes for capital. The good news, of course, is there's tons of seed capital now. You can have super angel investors, individuals like Ravi sitting in the audience. He also represents HPS. So he's representing an organization. You've got seed funds, you've got angel clubs, you've got incubators, accelerators. So given the current market scenario, if there's a young entrepreneur, where should he or she be going? It's different strokes for different folks. So there can never be one answer, to be honest. But Karthik, what do you think?
It's the biggest learning for us as a fund. So we've co-invested with all those avatars of people, right? So our model was that we need to de-risk some of this risk by getting both capital de-risking and bandwidth de-risking, geography, domain. So how do we add those pieces rather than me trying to be, or my team trying to be superheroes and help every company, right? So it won't happen. So we partnered with everybody. So the learning from my perspective is that I don't think every company was suitable for us. Only because, as an institution, we are pretty much the only shop that is willing to bridge that company. So when the company runs out of capital and we think we've co-invested, we've put 50 lakhs and somebody else has put 50 lakhs, and then it comes to the next round, invariably the only guy who has the financial capacity to invest is us. So you can't expect angels to keep coughing up more money. So I've begun to question myself on why did I play that first 50 lakhs? I could have just waited till that bridge opportunity came, right? So I get a sense that if a company today is looking to raise, either the concept is too early or they haven't gotten any product or customers out there yet, and they need to flesh that out, definitely go to accelerators, incubators. If you're looking for 50 lakhs, 1 crore, 1.5 crores, I think there's enough angel money to go and raise that. Don't come to funds like us, because unless you really, I mean, they might yet pitch to us, and you or me might love it and say, we'll do all of it, but I think it's going to become rarer, the way I see it. The opportunities really for us is going to be, funds like us is going to be to enter, once there's a 1.5 year performance track record, you know that the entrepreneurs are gritty enough that they're going to survive another 3 years if required. They're not just going to give up and say, I've run out of cash, this looks like a really tough thing, I'll go back to my job. We've seen that. We've shut down 2-3 companies, we've seen that attitude in a couple of guys, and that's scary. So one question is, why the hell did we come in first? We should have let somebody else take this risk and measure all of this in the team, and then put in the money later. So I think the pecking order is emerging, and if that emerges, I think there will be, across all these stages, there'll be 3 years or 4 years of brutal, bootstrapping, fundraising, growth, etc. And it will happen through 2-3 rounds of capital. Friends, the classic friends, family, accelerator, angel groups, angels, then funds like us. Then what you've done is cumulatively probably given them 4-5 crores of capital. Then they have some meaningful chance of building paper value of 30 crores, 25-30 crores. That's when a Series A guy says, aha, I'll put $3 million, or I'll put 10 crores or 15 crores. He's not putting money into concept risk which hasn't shown that paper value. So, I think we are at fault for underfunding our companies, so to speak. Both in terms of the timeline that they require to prove what is required for a Series A investor, which is why I keep saying the bar is high. It's always been high. They're not going to miraculously deliver that in 18 months. So how do we...
so that's very interesting, because what Karthik is saying is that the industry is evolving and maturing. And there's a place for everyone in the pie. Another thing that we've noticed in our portfolio is a lot of the young companies we funded here in Bangalore or in Mumbai or wherever, but are now thinking very global. And some of these businesses are, like a cloud computing company we did recently, are not businesses that most Indian VCs will fund. These guys, the local VCs, certainly understand the business, but it's not within their ambit. So that becomes a big challenge. You give an entrepreneur $500,000. He's an Indian entrepreneur living in Bangalore or Delhi, but the business is global. And now he has to go raise Series A in the US or a bridge in the US. Very difficult. New challenge. What do you guys do in Blume? Maybe Manish,
I was just going to say again, you don't have to do everything yourself, right? So the question is, if you have a great platform like a cloud service, and if you can find a distribution channel or partners in China or Singapore, why not? Why do you have to go set up shop yourself in those countries? And so I think that, again, partnerships, distribution channels, use other intelligent avenues to get out there, and don't just assume that you have to do everything from scratch yourself.
So, people who have Southeast Asia relevance, beginning to get some interest from Singapore-based investors. So, Jungle, as you know, put money into ZipDial recently. To be very honest, we've struggled to get the attention of US VCs. So, India is too far, unless you already have a base. So, all the stories that you see out of Nexus or Sequoia or an Axel is probably because they already have relationships there. And the founders are probably sitting there in a holding company, the parent company.
Do you have an example of a company in your portfolio which actually moved to Singapore? As most of you folks know, Singapore has been very open to helping startups, but they have a whole host of restrictions. So any examples of companies?
Yeah, so ZipDial will have a base soon. I think Val is going to spend more time in Southeast Asia. That's the motivation for Jungle to have put money. And there's a company called Trip Villas, which Roshan De Silva runs. So very early on, he was getting this, he got fund from Joey Ito's fund. And that was getting this government subsidy. So they made him relocate to Singapore, whereas he was actually based out of India. And that was the bulk of the money, actually. So even in the seed round, people moved to Singapore.
So that's a good segue, right? Yeah. There's one reason to move to Singapore is markets in those regions. You go sell to that part of Asia. But could there be an opportunity for young companies in India to leverage all that money from Singapore, but still technically be an Indian company by actually moving to Singapore?
It's a trade-off, Sasha. So if the market is here, I think it's a bad idea.
It's tough.
Yeah, it's so both, it'll be a little bit of a fudge if you try to do that, where you're simply going there because of the money, too early. So if the market opportunity is there, then it makes sense. Just to hack that additional 500K doesn't make sense because you'll spend that money living in Singapore. So at least one founder, you have to have a base there. The Singaporean government is beginning, by the way, they're beginning to crack down on what is a Singapore company. Right. So if you have one founder sitting there and one founder sitting here in an early stage company, there's just going to be too much friction in getting the work done. So it has to be market focused in my opportunity, just as in the US as well. You're not hacking it, right? You're basically, the US is your market, which is why you're relocating to that country. But I think that's a huge opportunity. It's been very difficult to get the attention of US investors. So whenever our guys go to the Valley for 3-4 weeks, we make all the introductions. They hear them out and then they say, are you moving here tomorrow? Then we'll talk. So so it's at seed, it's a very difficult situation. This guy doesn't have the money to relocate there, set up camp there, live there, and test the waters, just so that a Series A guy might buy it, right? There's no guarantees. So it's a very expensive, but post Series A, it's possible. So Ketan of Metal is currently in the Valley and he has been for the last 3 weeks. He will be for the next 3 weeks. So he's saying if required, in another month, I will move myself to the US because he got one single client. I don't think it's signed, so I shouldn't jinx it, but one single client whose single order is bigger than his entire India business today. Right? So when you're seeing those kind of shifts, then I think it's time to move. And though Kalari put the money in a Series A check, it's very likely that the Series B check could come from the US.
Manish, from a corporate standpoint, are you guys seeing more interest on having people on the ground as far as making investments, not M&A? For example, in your firm, how many investments have you guys made worldwide? Have you?
No, again, I think that that's really not our strategy. It is to work more with the startup community, jointly in, as I said, bundling products, looking at value-added services, providing them our distribution channel, providing them marketing funds, things of that nature. Because, as Karthik said, some of them is just so early that you also want to see what value is this, to your overall customer base. So I think that's really more our strategy in Asia and certainly here in India. It's not necessarily going and buying startups because, frankly, there's just a lot of early stage activity. The market in many degrees is not even ready in India for a lot of different technology products. There's still a product market fit discussion happening, etc.
Okay. I think we've been rambling too far. So maybe we can have some questions if anyone has any questions, audience. Yeah, young man here first. Are there any mics? Is there a mic there, please?
If I try, hello, can you hear me? Yeah. If I see what we have discussed, I see 4 things emerging out of what we've discussed here. Either it's a queuing problem, which means we have a lot of startups coming up, but not enough Series A funding which is happening. The second kind of thing is the thing of threshold. Whether you talk about the threshold always having been high or it going up further. The perception may be that it's probably going up further. The third is the lack of any kind of M&A opportunities. And the fourth, which was the last point being discussed, is in terms of the possibility of getting funding either Series A or later overseas. That being a kind of an issue of getting it. I think from an entrepreneurship community, there is definitely a feeling that probably there is a Series A crunch. Whether perceptual or real is, after all, perception is reality. So that's, which out of these 4 do you think, if there is a crunch, is the most significant factor that entrepreneurs need to factor for when they are looking at Series A funding?
The last 2 are solutions. They have nothing to do with the crunch. So
the inability to do that, or the bar shifting higher, gets perceived by the entrepreneurship community as a constraint.
So the point is, okay, so one statistic which I think most of you know, but if you walk into a Series A guy's office and say, what would your desired exit be in terms of value? you will never hear a number less than $50 million. Okay? So if a Series A guy gives you not 5 million, if he gives you a rupee, he still expects a $50 to $100 million exit range. Otherwise, it's not worth his time. Simple, right? So they make 20, 25 investments in 3-4 years in one fund cycle. And if they do not see that exit opportunity, because that might require another round of dilution and then an exit for them, they're not going to participate. In short, what I'm saying is, if you're a sub $50 million opportunity, you cannot get Series A, perceptually, right? We acted like tigers and funded such opportunities. So you're screwed, because if you do not get, if those companies do not get acquired, then you have nowhere to go. You either bootstrap, wait for dividends, literally, or you get acquired, because no Series A money ain't coming from anywhere in the world. Not India, not US, not Singapore. So there are two sets of problems. One is, are there ideas which are not India-centric and therefore not well understood by India? And there are mandates, like Matrix cannot invest outside of an India-centric business idea. That's a mandate, right? So because of all those concerns, are you limiting yourself by only working with 15 VCs in India who might not be able to fund overseas-oriented plans? So you have to solve that problem by asking your investors to say, give me leads, do you have contacts there? I'm a US-centric plan. So firstly, entrepreneurs should evaluate all of us as well. Hum madad kar payenge nahi, or are you just going to, like, take that 1 crore check and both of us will be crying at each other's, arms after a year? So if you are evaluating us, ask us whether we have the ability to take you to those investors. If not, then it's a dead end, right? That's one. Second is, M&A environment, you and me cannot change overnight. The buyers have to change, and somebody has to cultivate to them the idea that there are interesting companies which are worth acquiring for $3, $4, $5, $10 million. That hasn't happened in this country. Whose fault is it? Collective. Everybody is to blame. The buyers don't think anything is worth buying. Sellers have never gone and positioned themselves for purchase, and the investors don't know how to get started, because it's not an easy problem to solve. So those two are different points. The other one which you're talking about, the funneling, yes, the funneling is a problem. The pre-money deck I did started putting in all the Series A, B investors on one page, and then I thought, it wouldn't be nice if I don't fit everybody in. All of them fit in half a slide. That's the ecosystem for you in the entire country, right? So please be aware that whether you believe there's a crunch or not, there's only n number of players there. Right? There are not too many more institutionalized players. You'll get money from HNIs, you'll get money from corporate groups. That's how we're bootstrapping our startups right now. Jo paisa milta hai, le lo. So there is no structured Series A financing beyond a point. There are 10, 15, 12, 18 players, and that's about it. So that's one. The bar being higher, whether you want to believe it or not, I think it was always higher. There are always exceptions. You'll see one freak case where you'll see some little site getting $2, $3 million, and you'll say, "Arey, ye kaise ho gaya? I have a much better business." I can't explain those, but those are exceptions. You cannot build, I cannot give advice to a room like this based on exceptions, right? So forget the exceptions for a minute, then you're simply sitting on the rule, which is basically a very high bar. Unless you miraculously caught the e-commerce wave between October 2011 and November 2011. Right? So if timing plays a big role, but I'm just saying you can't depend on those kind of things when you're building a business, right? You're not building for these short windows or luck per se. You're building to build a business. And I think that's what my message to the entrepreneurs is: build the business and take enough capital that you can successfully build that business. Otherwise, you're in trouble one way or the other. Series A crunch or all these options aside.
Any question? Any other questions?
Yeah, I have a question for Manish.
Speak a little louder, please.
Okay, I'm wondering, is basically, I'm wondering if the opportunity for, there are just a lot more angel investments made in the US and China, and I'm just wondering if the opportunity for investments is not as good, or if the appetite for risk is not as high in India.
Yeah, I mean, there are lots of angel investments in those countries as well, but I've just observed that, within 12 to 18 months, they can sort of determine whether all those questions are being answered, right? Whether the product and market fit is there, the paying customers are there, repeat customers are there, the unit economics works. I mean, people are able to answer those questions in those markets in that 18 months that that the angel money takes them. It just seems like in India that's not the case, and whether it is the fact that entrepreneurs are raising money too early before trying, as Karthik is saying, or it's just that the market is slower and not responding because at least from a technology perspective, it's a less technology penetrated market compared to the markets you mentioned. So yes, there are angel funds there, there's angel investments there, but perhaps they're identifying whether or not they're succeeding, or they can do Series A earlier and then dropping out, versus over here where said people are getting the bridges and they're lingering further, and then after 3 years, not sure what's happening. So that's how sort of, I don't know if I answered your question, but that's the difference I see in places like the US and China, who do have a very large angel ecosystem and many startups, probably even more than India. Even China does, right? But again, if from a economics perspective, a lot of those startups have been successful now. Maybe the markets are ready over there. Take the internet. You've got 500 million mobile internet users in China. You've got 700 million broadband users in China, right? You've got a digital advertising ecosystem which is much bigger in China than it is in India, right? So you've got some other things that enable these businesses to succeed economically and to prove certain things to their investors, and perhaps that doesn't exist in India. So perhaps it's more difficult in India in that 12 or 18 month cycle to prove your business model and to prove to your investors that you're ready for more money.
Okay. Any other questions? Yes.
Hi. The question is an extension of look for money to invest and not to spend. So I just have a case where a friend of mine was trying to raise money, and he needed just around 10 lakh rupees to go ahead and, meet his need. So in order to raise just that small quantum of money, there was no organized player who was willing to take up that kind of ticket size for a startup. So he kind of made up a bigger plan that he wants to open 5-6 more showrooms, and that was nowhere on the paper, and suddenly we had a dream, okay, make this and we'll get more money. And we made it and we ended up getting money. Is this a recommended thing? I mean, why are you not interested in smaller ticket sizes? And when we are able to pay and we have if you like an idea, why is it that an organized player is not able to take up small ticket sizes?
No, it's a very complicated question. So in the sense that until we started funds, we didn't discover how tedious it is to run funds, right? So it feels like a cool job, it's not. In the sense that there is a very, just as VCs will not cut, so our question to VCs is, why don't you cut a $500,000 or $1 million check? It's a great idea, right? It has legs. And they say, no, we can't. It just doesn't fit into their economics. So every player is financially has a hierarchy or has an organization, as a certain set of check sizes that he can cut, right? And an institution cannot afford to come down to those levels because you can't manage it. So what you're essentially saying is, do the equivalent of what a microfinance organization does today for retail lenders in a venture-like format. Very challenging, because you're talking about exits being there. For me, making even a 10-bagger on 10 lakhs is 1 crore. If you're running a 500 crore fund, how does a 1 crore, return excite me at all? So there are all of these, that's why I said it's a very complex question. Therefore, I'm saying these hierarchies will develop. Somebody who, actually my rule of thumb is, someone who's a gritty entrepreneur should, in this day and age, if you told me this 10 years ago, I would have said, yeah, 10 lakhs is a lot of money. In this day and age, cannot influence their friends, family and network to raise 10 lakhs, something's wrong. There's enough money. Friends have, like my classmates will throw 5-10 lakhs if I throw an idea, any idea. So they should have enough faith that they're willing to risk at least that much money. So I think at every hierarchy, like you go to an angel group, like Mumbai Angels, they'll give you that, they'll evaluate you for 1.5, 2 crore bucket. Come to us, we'll evaluate for 2-3 crore. That's how it is.
Ravi wanted to comment.
Yeah, just a comment and then a question.
A little louder, Ravi.
Yeah, a comment and then a question. Comment on Karthik's point about the NASCOM event. I think, Karthik, that was the first time we did that. I think, you don't want to set unrealistic expectations. As somebody who has pursued corp dev departments and top tier VCs, it takes months of pursuit, right, to make the right connection. So if you expect to set the expectation with your startups, right, that they'll get a call back in 2 weeks and whatever.
No, I didn't. I just asked.
I understand. So, that was a first attempt. As somebody who helped put that together,
it's a big
I'd
move.
like to see that happen a lot more, right?
It's a great move.
And
Actually, Ravi should get a standing ovation in this room.
no. I just don't want the audience here and even your portfolio companies to get the expectation, right?
No, I think, Ravi, it's a great start.
Right.
I think
So
someone had to do it, and as Karthik mentioned.
and I really want those companies to actually send those folks to more events and engage more,
Because
right?
what we do now in our portfolio is we ask the entrepreneur and use our networks to go hunt for the M&A guys in Fortune 500 companies in the US. Can you imagine how tough that is?
Exactly.
And to the credit of some of these entrepreneurs, they do find, like one of our portfolio companies showed up in Bombay this week after a 10-day trip, this week, and he said he did this, very commendable. But it's very difficult, and that's an exception to the rule. So we need more people like Ravi here locally.
No, I'll push. So by the way, in that group, I think 4 out of the 8 were from our portfolio. I'll push.
Yeah, totally.
I push them through and it was my initiative actually.
Yeah,
So I'm not going
think,
to let off.
I think this is a journey, right? And it's a marathon, not a sprint, okay?
Yeah,
so I think we as the community should be supportive completely, right? And encouraging the startups to keep going and trying many times, okay? The question actually that I had was, are we doing a disservice in actually providing bridge rounds? It's a bridge to nowhere in many cases, okay? 1. 2, are we doing a disservice in funding companies that are actually global players out of India when actually they should immediately be seated in the valley directly, where the ecosystem to have them thrive, where they can, the DNA available, the talent available, the connections available, the ramping capabilities available are vastly superior. Why do seeds for a global play in India? When all it takes is a couple of guys moving them to an apartment in Silicon Valley, getting going. What are you trying to achieve here? Is my question to the 2 investors at least.
It's a bit of a chicken and egg. The entrepreneurs here, they feel comfortable in this environment. Clearly the business is a global opportunity. They know it.
But Sasha, to that point, every successful entrepreneur, even those that are bootstrapped, are now thinking of going to the valley to set up. All the VC firms, as they're putting their A in, and even pre-A are saying, move to the valley. Every M&A guy you talk to says, you need to be in the valley if it's a global play, right?
So, Ravi, my view is firstly, it's easier said than done. The valley is crowded with high quality entrepreneurs. It's not as easy to go raise quality money there. You might get your seed round of 200K or whatever, but it's not any easier. If the person has worked there, understands the market, can go and plug in there in 2 weeks, it might not be a bad idea. A lot of the guys we have funded here, I don't think belong in that category. Bad idea to just go and tell them ship out there because the learning curve is as